All right. Happy Tuesday, everybody. Omid coming to you a day late because of the Memorial Day holiday. Nevertheless, lots of important stuff for us to jump into, so let's get to it. As I've always promised you since the beginning of this conflict, this war, we're going to start out talking about oil prices because oil prices affect everything that we do, and specifically mortgage rates and finances are heavily affected by what's happening at the oil refineries as well as at the pump. So WTI and Brent crude oil, as you can see on the 26th, there are both lower than they were last week, which is good news. As I've been telling you, don't look for relief immediately at the pump because those are the pump prices there. Probably has something to do with Labor Day weekend as well. However, at the end of the day, these things are going to take a lot of time for them to come through and for us to see any kind of improvement. So I'm not holding my breath when it comes to that. Speaking of holding breath here, our buddy Kevin Walsh, who is the newly elected Fed president, took over Jerome Powell's spot, is now kind of in a spotlight because he has to be able to navigate his way through this level of inflation that we are seeing. So we have sticky global inflation. We know that for a fact. The rising cost of commodities, especially with oil as well as diesel pushing the way, leading the way there. And so if inflation continues to rise, Federal Reserve may be actually forced to increase the Fed funds overnight rate, not decrease them the way that everybody wants. So right now, there's actual conversations in the marketplace, and odds are higher that they will actually be increasing the Fed funds rate. Now, as that happens, how does that affect mortgages, etc., remains to be seen. There is a formula to all this, but unfortunately right now, up is down and down is up. So there's not a whole lot of prediction out there about what things are going to go like. But we'll know a little bit more about that later this week when the personal consumption expenditure, which is the Federal Reserve's favorite way to measure inflation, that'll come out later on this week. I'll show you that in 2 minutes. Now we get to my favorite segment, which is the power of the portfolio. As I tell you every week, the portfolio here at First Security is something that I've never ran across before, and I've never seen it work as well as it does here. I'm going to share you a quick story here. So we had a set of clients that had been on an online application to one of the online lenders. And these folks had gotten their approval and they had their approval letter in hand. They went and wrote an offer. And shortly after they wrote an offer and before they got their appraisal done, loan officer from the online bank calls and says, oopsies, I made a mistake. You don't qualify. So they were actually declined. Now, the problem behind this was they're solid buyers, but they have extremely complex tax returns. They buy and sell different properties. They improve different properties. And every time they do that, they open up one LLC, and that LLC only lives for this long, and then they get closed. So traditional lending, like an automated desktop underwriting system, is unable to understand this. And big box banks weren't able to get this deal done. So they came to us. We have common sense underwriting, as you all know. We're going to underwrite the borrower, not just the guidelines when it comes to our portfolio. So we had plenty of assets to back this up. We had good long-term credit history from these folks, as well as strong income once you got through all their complex tax returns that were about yay thick each. At the end of the day, we were able to offer a quick and fast approval on this one, and we were able to actually close them on their original contract date. So the seller, who had in their hands $100,000 non-refundable earnest money on this deal, also got paid, and our family has moved in. So again, another power of the portfolio. You guys are watching this. If you have a complex situation, no better place than ours. Obviously, we still do all the vanilla stuff, all the Fannie Mae and Freddie Mac and FHA loans and all those things we do, but not a whole lot of folks out there with the portfolio power. So keep that in mind as you run into any issues, especially my realtor and builder friends watching this. Let's jump on to what's going on for this week. So really a positive trend that we're seeing there in mortgage-backed securities highlighted there by the yellow. So I'm happy to see that. We're not seeing immediate relief, much like at the pump. We're not seeing immediate relief at the rate sheet as well. Remember, rates tend to rocket up and they parachute down. So we are now hopeful in that parachute down, but we're looking for directions, and these bond traders are not very excited about what it is that they're seeing. The good news here, though, is last week the 10-year Treasury was almost at 4.6, and today's at 4.5. So listen, I'll take it. What's in the market for this week? Case-Shiller and FHFA home price valuations came in. They both showed that the valuation of homes is slowing down nationally. I think it's appropriate that happens, and that's actually decent news because it makes it so it's a little bit more affordable to all those folks out there who are trying to find a home. It can't just always keep going up. That's not the way that things work. Thursday is action-packed, and this is where you definitely want to follow us on Instagram because we're going to post those daily story 30-second updates so you're in the know. The PCE, as I talked to you about, personal consumption expenditure, Federal Reserve's favorite way of measuring the inflation. The GDP, gross domestic product, how are we doing as a country with our output? Jobless claims, folks getting unemployed for the first time, as well as durable goods, how many things that are built to last longer than 3 years are being bought and sold. Think airplanes, washing machines, things of that nature. On Friday, there's no news, but there's lots of market movers here between Thursday as well as the geopolitical stuff, which again, who knows how any of that's going to go. So as you can see clearly here, last week we were at 6.65. Today we're at 6.61, 4 basis points. Listen, it's going the right way. I'll take it. I'm not complaining. Okay. Remember, these are national average rates for purchase transactions, 780 credit scores with 25% down. So visit with your lender to make sure that you're getting accurate information. All right. As always, subscribe, like, comment, share, do all the things, hit all my buttons to make sure that those who you care for are in the know as much as you are. As always, we're only one phone call away. So if you get stuck on something, if you need help, if you have some questions, pick up the phone and give us a call. Catch you next week.